7, 6, 5, 4, 3, 2, 1.
Hi, everyone.
Good morning.
There we go. Good morning. 10 a.m. on a Saturday. Hopefully you're enjoying your weekend. So welcome to our home buyer seminar. And let's just jump into it. My name is Vinnie, and we got David.
David Wright got here live Saturday morning. We appreciate y'all's time. I know that time is valuable. So we're going to go through this as quick as we can. We are always open to questions, concerns, anything. We want your feedback. So please feel free to always ask us.
Sounds good. All right, you want to jump at it, David?
Yeah, so let's pull this open. All right, here we go. So where do you start with buying a home? You know, what do you want to look at? What's most important? Well, you first, as you know, we're exiting a pandemic time. So job stability is super important. You really want to look at that. You also want to look at your job for future growth, the opportunity it has, what sort of pay increases you can get. And then next, you want to look at your budget. Where do you spend your money? How do you save your money? Do you contribute to your 401k? Do you have an emergency fund? Do you plan on vacations, monthly, hopefully, yearly, and then what amount did you save for a down payment, or do you need down payment assistance or a gift? And then lastly, what is your most ideal monthly mortgage payment?
Now, something to remember, okay? There's a difference what you qualify for and what you can comfortably afford, okay? There's definitely a big difference. And if you're paying one thing for rent right now compared to what you're looking to purchase and have that as your monthly payment, really dive deeper in that, see how it feels in your pocketbook, just so you feel comfortable with that, okay? Because it's definitely different giving up that Starbucks every couple of days compared to actually doing it.
Vinny, I thought about something when we always mention that ideal monthly payment, and you mentioned about what you should do and what you shouldn't do. Most of the time when people talk to me and you ask them ideal monthly payment, they take what they currently pay in rent and they add $500 or $1,000. Just something to think about. So next, how to finance your home, how to pick a lender. This is super important. You're making the biggest investment of your life. So picking a lender, you shouldn't just randomly pick your uncle's former friend's cousin's roommate. You need to do research. Ask for a referral from an honest agent. You can also go to Zillow, Yelp, Redfin, look at them and then Google that person. If your loan officer does not show up on Google, they do not exist. They are not doing business. And if they don't have online reviews about their performance, they're not doing business either. This is the 21st century. People are on the internet. So if they don't exist, they don't have good reviews, that's not a good sign for you. And then lastly, check their license number. All of us have an MLS license number. The higher the number, the newer to the business. You want someone with experience when you're getting your home loan. It matters.
Yeah, dive deeper. I mean, it doesn't take long. Just do a little research. I mean, you'll be surprised. And I say this all the time. More people do more research on the phone they're going to buy than the person they're going to use. So just dive deeper, put their name in there, and really see what other people have to say about that person.
Next, now that you have a lender, what's the next steps to secure your home loan? Well, this is the part that everybody puts off. And Vinny, you're well aware of this. People come to you and say, "Oh, I haven't been pre-approved. I just want to look at homes, and once I find the right home, I'm going to do this." And what's your opinion about that, first of all, like when people do that?
Well, I mean, people buy off emotion. I mean, that's, I think, the really biggest thing. So just imagine yourself looking to purchase a home, right? You have no idea or no real tangent idea of what you can qualify for, all right? Yeah, you go, someone takes you, okay? Someone takes you to property without being qualified, okay, hypothetically. You fall in love with this property, right? Yet you find out that property, that monthly payment, you can't qualify for, or you can barely qualify for, but it's going to hurt you on a monthly basis. But now you're emotionally attached to this property, so anything else you look at is not going to be the right fit for you, right? So it's a game plan. Know what you're looking to do, right? Then go out there and do it, because you want to have kind of a cap on your emotions a little bit, because this is an emotional process. So understand what the monthly payments are going to be, understand what you're qualified for, and then go out there and fall in love with the property.
You know, so with that being said, we're going to look at 2 years of your employment. We're going to look at 2 current pay stubs, W-2s, 2 years taxes. We're going to look at all this stuff. We're going to pull your credit also. And what you look at on the internet as a consumer, from creditreport.com, freecreditreport.com, Credit Karma, all these free sites that offer you your credit, it's not your real score. That score is based off of you getting a small car loan or a small credit card. When you get a mortgage, we hard pull your credit, which means it is the most restrictive. It means your score, if you looked at Credit Karma and your score was 740, and then I pulled it as a mortgage file, your credit score is probably 40 points lower. So please be prepared for that. And then the other thing, like what Vinnie was mentioning, we know if we came to you and we said, here, we have 2 cars. One's a Porsche and one is a Kia. Test drive them both. Tell me which one you like.
Well, of course, Kia, right?
Yeah, we know. So you don't want to go look at houses when you're not approved to buy that certain level house and then be let down when they come back to you and tell you, oh, well, the Porsche is, 100 grand and the Kia is 20 grand.
And you know,
there's a big difference.
The opposite can happen too. You find out that you're actually qualified for more. So you go, oh, wow, I can qualify for more, and the monthly payment is not as bad. I mean, I've had, and talking to one lender, and they find out that another lender is offering a better rate, and they go, wow, okay, by going with this lender, I'm able to buy a similar property with about a $30,000 difference right there. And $30,000 difference, when you're buying a home, can be a very big difference. Also, too, if you're looking at the screen right now and you're looking at, okay, W-2s, tax returns, things like that. Let's say you don't have that, you don't fit into this bubble. For most brick and mortar banks, they're going to want to fit you into this bubble. Yet a direct lender, a broker, they might have other programs that can help you out and get you qualified. So just because you don't fit into this bubble, talk to a trusted resource, talk to David, talk to a trusted resource you might know, and see where you do fit and what they can qualify you for.
Yeah, because every lender has a certain limited amount of tools in their toolbox. If they tell you they do every single program, they're lying. That's just the reality. We can only do so much, and we want to do the programs we can do the very best. So Vinnie's 100% right. One lender may be able to do one thing, and another one may look at your file and go, oh, there's a better program. We can do this. This is better for you. So please do your research. Please get pre-approved the correct way. Look at your tax returns, look at your W-2s, look at your pay stubs, bank statements. And if you don't fit in that box, like Vinnie said, there is alternative programs. They are kind of restrictive right now, but we are exiting a pandemic and we're turning a corner. So things are going to change. Ooh, you want to do this one, Vinnie? This is a good one right here.
So the lender has read everything and shared your goals with your agent. Okay, what is the most important thing for you? Okay, so monthly payment. Is it location of your home? Is it the appreciation of the home? Is it future rental value of the home? I mean, really diving deeper and knowing what you're looking to do is really going to help you out with this purchase. What is important about the loan? Is it the down payment, interest rates, lower costs, lower long-term costs? Now, going to the aspect of what's ideal for you on your property. I mean, it's really sitting down and doing a buyer's consult with your realtor, with your trusted resource. That's going to help you define where you want to go. Do you want a single family home in one area compared to maybe a condo that maybe has a little bit of restaurants and everything around there that might be more appealing to you? So really diving deeper, seeing what you can qualify, seeing what you're looking to do on a monthly basis. With the loan type right there, some people go, well, I got a great interest rate. Well, did you buy points? Oh, I got a horrible interest rate. Did you sell points? I mean, what happened there? So understand the whole picture of it instead of just picking one little aspect of it.
Yeah, not all loans are the same, I hate to tell you. And your goals are most important. Me and Vinnie were very focused on goals to make sure that we're helping you achieve the ones that you want, because otherwise you're just going to buy a home and later on and possibly regret it.
I mean, this is an analogy that someone else used, so I'm taking that thunder. But they basically go, okay, well, when you travel, all right, are you just jumping on a flight and going to wherever it takes you?
Wow.
Or do you at least assess the idea of where you want to go, what you're going to do there, what you want in that travel, what the pricing, what they're going to offer out there, and then take that trip?
And was that airplane cleaned properly?
Okay, on a side note.
Okay, wake up, people. This slide is real. We did this just because there's real horror stories in lending. Some of you probably have friends that told you getting their home loan was terrible. Everything went wrong. From they lost the house, the lender always wants more items, process takes forever. All of a sudden you need more money. All of a sudden the loan doesn't meet guidelines. You need a cosigner. Loan costs went up. You got to pay off these debts. All these horror stories can be avoided if you have a good lender and you do the pre-approval process correctly the first time. So, please take this as a big dose of reality, just like that rabbit's a big dose of reality. Do things the right way.
So yeah, understand what they're looking at. I mean, this is a analogy again I use a lot. Is David, the originator is like the attorney, the judge is like the underwriter. He's trying to build a case of why he deserves to buy a property, right? So the more information that he has, he's able to build this case. Now, if he has an understanding of what the underwriter is looking for, maybe some originators don't have the understanding of what their underwriter is looking for, right? So with them not having an understanding of what they're looking for and they haven't sent it over to them to pre-qual them, right, that person, now let's say they get into escrow and you go, oh, well, what happened with this loss of job right here where you had basically 4 months off? Maybe they didn't have enough facts right there. So make sure he has the tools available to sell the idea to the underwriter why you should be able to buy a property.
Yeah, everyone's situation is unique. And just as your fingerprint's unique, we want to make your loan unique to your needs and goals to make sure that we help you the best we can. Oh, there's many types of loans out there. How do we find the best one for your situation? Well, as we exit this pandemic, and mine and Vinnie's feelings go out to everyone out there that suffered, and we're sorry, and we're hoping for a quick turnaround for everyone. And during this time, lending changed. So this slide shows you when we used to be down at 580 FICOs. Now we're at 640. So things are a little tougher, but we still have small down payments. There's FHA loans, conventional loans, VA loans, jumbo loans. There's homebuyer assistance loans. There's loans sponsored by the state of California. There's multiple loans. Why do we mention this? Because we need to do the pre-approval process to make sure we pick the right one for your right situation, for your right goals.
Well, and also too, I mean, this just passed, like 2 days ago, was the idea of forbearance, buying another house after the forbearance.
Oh yeah, it just, literally me and you were talking 2 weeks ago, and Fannie Mae, Freddie Mac issued rulings saying once you go into forbearance, we'll no longer finance you for a year. And then they retracted it all and gave it all back. So things change all the time. And if your lender is not up to date, they will miss opportunity for you. So if you like missing opportunity, choose the wrong lender. If you don't, then choose the right one.
All right. So this is just a kind of give overview. Now, no one has a crystal ball, right? And we can assess what happened over the last, 5 years, 10 years, 12 years. So this picture is just to give you an idea if you would have bought 5 years ago. Not saying that if you buy today and this was going to happen 5 years from now, but this is just give you an idea of what happened 5 years ago. So the market went up. So properties in the 92105 have gone up from 640 to 836. Was that a forecast?
Yeah, that was a forecast.
Oh, okay, that's a forecast of, I guess, projection. But again, I'm always hesitant on a slide like this. There has been a lot of gentrification that's happened in this kind of hyper-focused community. David always brings up the idea of gentrification. What does that mean? It's the idea, and I'll just jump in beforehand.
Jump in beforehand, hang that, put that one in there.
So the idea is in areas that maybe are a little out of date, kind of falling down, you usually get investors that want to beautify the area. So they'll buy the properties, renovate the properties, and resell them. So it can have a negative connotation to some people. Other people, they see it beautifying the area. So that we saw a lot of that kind of happening in this community. So just something to kind of be aware about when you're looking to purchase, is kind of what communities you're purchasing in and what's kind of happened over the last 5, 10, 15 years.
And it's like Vinnie was saying, this is not guaranteed. It is an estimate, but historically, you look at what's mentioned here and what we go over. San Diego is a great place to live. People are still going to move here, and both of us feel really good about the market continuing to be very strong.
And yeah, please, if you guys have any questions, feel free to comment on here, and we'll answer the questions as quick as we can. So average closing cost for a new home. Do you want to jump in this one?
Yeah, let's. This is a question everyone asks, and it's usually the first one because nobody realizes you have your down payment, you're ready to go, but then the lender comes at you and goes, "Oh, there's closing costs." Well, do you want a simple formula to save yourself time? Use 2.25% of the purchase price. That's it. It's pretty conservative. It's pretty spot on, and at least it sets you up for success. If it's a little bit higher, which it probably will be, that's better for you. And then there's also different things that can happen with the closing costs. They can be negotiated by your realtor. You can get lender credits towards your loan. And different home buyer assistance programs also pay for closing costs. But overall,
giving you an idea is closing costs are one thing that you can get assistance from the seller with, right? So we can put that in the offer. Yet for the down payment, that's something you have to bring in or have as a gift fund. So it's two different things. You don't pay a realtor on the buy side, so that's something you don't have to worry about. You pay for fees, originating fees, and things like that. Now, like David was talking about, based off the time you close in the month too, can sway where the closing costs are. You know, if you're closing it maybe end of the month, you're paying for some of that mortgage payment but your first payment is going to be a little bit farther off if you pay a little bit closer, you know, things like that. So you can get lost down the rabbit hole if you Google what are closing cost payments, if you Google how to buy a house in the United States. Different states are different, so just be aware of that. Talk to a trusted resource, get the facts, get the information, and know what's going on.
And we're moving through this fast because we know you want to enjoy your Saturday. So these are general guidelines. More questions, concerns, reach out to us. Exactly. You know, what's very important things to think about when buying? Well, you really want to think about how long you plan on owning the home. 5 years minimum, 7 years, hopefully. You know, you also want to look at where you buy, super important, with future resale, future rental values. Vinnie mentioned this earlier. We're saying it again because it's beyond important about having the right realtor to help you get the right property, because, you know, when you're buying your home, and you can make the payments, can you still sleep at night comfortably because you made the right decision? And then can you still save money towards your retirement with your new home, with your new payment? These are things you really want to think about, because once you get the home, you don't want to be house rich, cash poor. Old saying, but it works well.
I mean, that's why it's so big to have a game plan. I mean, go back to the idea again. We buy off emotions. For the majority of people buying a property to live in, we buy off emotions. You know, so really have your game plan together so you put yourself in control. I mean, that's the biggest thing. You want to be in control and not being your emotions in control of you. So have that game plan put together.
That game plan, I got to mention this because there's a thing going on with sports. Is there's a gentleman, some of you may have heard of him, Tom Brady and Gronkowski. Never heard of them? Well, they had a game plan. They went to Tampa Bay, and they got their own game plan for something new and big. So if you don't have a game plan, there's going to be a problem. Hopefully football comes back too, by the way.
All right, so this is going to be out there. This is going to be a court for a long period of time. Do you think they're going to win in Tampa Bay? What do you think the record's going to be?
Oh, man. You know, I got to tell you, I liked it when Gruden went to Tampa Bay and won the Bucs a Super Bowl. I thought it was amazing. And people are going to hate me for this, but I'm tired of the Patriots. I'm over it. So you know what? Let them go somewhere else. The coaches are brilliant gentlemen. Tom Brady, one of the best quarterbacks of all time. I hope they do well. You know, I wish the guy well. I do. I wish him well. I hope they do great, because all my Patriots friends, they're totally heartbroken, and they have been crying a lot, but I've been sending them tissues, not toilet paper, because people are hoarding it, but that's okay.
All right. Well, I'm not much of a football fan anymore, but go Padres. All right. All right. So choose now. Getting on to, we just talked about a great team, and now we're going to talk about finding a great realtor. Like that segue? Pretty good, right?
Oh man, you are smooth like silk, my friend.
Yep. There we go. So okay, so same thing that you did with the lender is do research, dive deeper, check the online reviews, check the license number. The higher number means new to the business. The the higher, newer to the business, the older the number, the lower the number, longer they've been in. Do they do it full time? Do they do it part time? Do they own? Do they not own? How many homes do they really sell? Experience matters. This is one of the largest investments in your life. Something I really think about. And again, I love using analogies. It makes life easier when you're kind of talking about things.
I noticed that. You're
So,
very good at it.
So really dissect. I mean, some people are in the interpretation that everyone in a brokerage is the same. The brokerage is the garage. The realtor, the team you use, is the car. Just understand who you're working with. I mean, I love the brokerage. I love my team. I mean, I love a lot of realtors in San Diego County. So it's really finding out who's the best fit for you and making sure that they're qualified. I mean, the stat that people watching will hopefully realize is that 20%, and maybe it's even more, 20% of the realtors in San Diego County do about 80% of the business. I've heard other ones where it's 15%, do 80%. So really dive deeper into that idea and understanding who you're working with.
I just got to second endorse this, because I see train wrecks created by inexperienced realtors all the time. And choose the best one. Don't just choose your former cousin's, uncle's, roommate's, brother, sister. Choose the best one. You don't want to make a mistake on the biggest purchase of your life. The experience matters, and really do your homework on this. Really check them out. See what they really sell. See if they really exist online. Check their reviews. You know, you don't want to hire the guy that also part-time works at Panera Bread, but then also sells you houses.
Nothing wrong with Panera Bread. I mean, I'm a fan.
Yeah, it's pretty good sandwiches, actually.
All right, so you have your loan set. You have a great realtor. So what's next? So really dive deeper. I mean, we talked about it again. Is what kind of house you're looking for? Big house, small house, location, schools, appreciation, pricing. I mean, these are all things that want to go into this game plan that you're building out before you actually get out there. Now, understanding it, buying a house in a more popular area, more central, is going to be more expensive than buying a house maybe a little bit farther out from a centrally located area. So really know the communities, know the pros and cons, know what you really want. I think one of the better ways, if you can't really dissect of what you're looking for, is understand where you want to be, what you want your routine to be, what you want your daily routine, your weekly routine to be. How far do you want to drive to work? How far do you want to take to drop your kids off at school? What kind of life do you want? I mean, based off of that kind of information, hopefully your realtor should be able to help you figure out what's the best community for you. Now, what's next after all of that? You write an offer. So the offer has the following: purchase price, terms of the offer, fees being split, or paid by each party, items being conveyed in the sale, and how much of EMD. Now, I love talking some smack to David. This is something that we kind of put together. He put the EMD. What is EMD? We have 1 to 5%. We haven't changed this. You watched our past ones. We left it alone. Usually, it's 1%. It can go up to like 3%. It's an arbitrary number, whatever both sides are willing to agree upon, what the buyer's willing to put in there, what the seller's willing to accept by taking their property off the market. Now, going back to the rest of it, these are all factors that play out in an offer. Most people believe price is the avenue. Yet, if price was the only avenue, why would some people take direct cash offers with 7-day closes? I mean, it's the idea that, okay, well, I'm going to get my money 23 days before the other offer would close. I mean, so sometimes time frame is a big importance to someone. So really diving deeper into what the seller's looking for to figure out how it's best to structure your offer.
And the other thing is, people are emotional. Someone selling a home is a human too. And I know Vinny does this with his clients. He'll take pictures, he'll send letters. He presents also the emotion, because people do make decisions on emotion. And if everything was about price and the cheapest, Walmart would rule the world, yet they don't. So it's a more complex, situation than you think when you make the offer. When your agent is smart and quality, they're going to put all the factors together to be like trying to figure out what's the seller's motivation to help them meet their needs, so that you two can come together to make an offer where both of you win, because both people have to win to get your offer accepted, which is, very, very crucial and super important. That's why it does matter, the experience.
And you're watching this, if you have any questions, feel free to comment below, and we can answer the questions to the best of our knowledge. All right, so what happens next with your offer? So you can get a accepted, counter offer, multiple counter, but once it becomes a meeting of the minds, that's when everything kind of goes forward. So if you get a counter, everything, the best way to look at it is that everything was agreed upon on the offer, and whatever happened in the counter supersedes anything in the offer. That's kind of the easiest way to describe it. But once there becomes a meeting of mind, off to the next stage. And that is your offer is accepted.
Boom, offer is accepted. So before you pop champagne, start partying, you got to realize it's like there's a couple more steps. So once the offer is accepted, escrow is open. That means your EMD has to be issued between 1% and 5%. And then next thing, what's going to happen? The lender is going to request fees from all parties, because what me and Vinnie mentioned about the 2.25%, well, a lot of those costs are title, escrow, recording, property taxes, insurance. The laundry list is huge. We have to request all the fees. Next, your agent's going to schedule home inspections, other inspections, different things that we're going to say he, because we're going to be biased here, different things that Vinny thinks is important about helping you protect your investment.
So, yeah, when you're in escrow on a property now, if you Googled the process of buying a home in the United States, you're gonna get a variety of different avenues. Some states are escrow states, some states aren't escrow states. Some use attorneys, some do the inspections before they actually get into contract. Things like that do play out. So in California, and again in San Diego, but in California as a whole, we are an escrow state. So once we open up escrow is a time frame and it's an entity. Okay, so with that time frame, right, we have time frames inside the time frame, right? Generically, escrow could be 30 days, and the time frames in there, EMD, generically 3 days to put that into escrow. Okay, you also have your due diligence period based off of how the structure of your offer is put to place. Generically, 17 days, 21 days for your inspection, your appraisal, and then for your loan. Okay.
You're talking really fast. That's a lot of data, Vinny. You may want to break that out a bit.
Yeah, we're giving a brief overview just so you guys can get to your Saturdays. If you have direct questions, feel free to reach out. But yeah, 17 days for your inspection and that kind of stuff. Okay, different ones. Now, you have the time frame to do your due diligence, right? The seller's going to give them information about basically what they know of the property, what's going on with the property, all the information at your fingertips. Now, in that time frame, you have the ability to do an inspection on the property. Okay, you don't have to do inspection, but you're buying one of the most important prices and properties you're going to probably purchase in the next 5 to 7 years. So do an inspection. Now, you do the inspection. My team, we have inspectors that we use. You might have an inspector or someone you use. They're going to give you a brief overview of everything to do with that property. Yet, if there's things particular with that property, you might need a specialist. You might need a plumber, might need a roofer, might need other people to dive deeper into that. Now, that's kind of your due diligence period. If there are things that pop up, you can negotiate with the other side. Sometimes they say yes, sometimes they say no. It becomes a second negotiation. So the fun doesn't end when you get into contract. You still have that ability to negotiate a little more. Same thing happens with the appraisal. All right, so let's say the value comes in a little less. It becomes in a second negotiation to see if they're willing to reduce, if you're willing to come in with a pricing. Last one is the loan. If that lender, if it's not David, if it's someone else, maybe didn't dive deeper and build a strong enough case to that judge, that underwriter, like we talked about. And now there's the judge, that underwriter, is seeing things that he didn't see before, didn't know before. It can fall out.
Because you tried to hide them.
Exactly. So now you have windows, you have timeframes in here. If something doesn't work out, you can back out based off of how things were structured. And based off how things were structured, based things are played out, you have the ability to get your deposit back. But be aware, different escrows, different contracts, they're all written. So talk to your person, your trusted resource, to know how you're protected. Well, that was a lot of information. I know that was a lot of information. And we want to make sure this is as smooth as possible and as quick as possible for everyone out there.
So, you know, while it's going, what also to expect, you know, Vinnie ran through this really quickly, but, you know, your good agent is going to go through this really fast to make sure your inspections are done, repairs are noted, formulated, requests for repairs, things are negotiated, price negotiations, further tests, mold, termites, water, plumbing. The list goes on fast. And Vinnie touched on this while we're processing your loan. If you tried to hide anything and think we're not going to find it as a lender, we will find it, and we don't like surprises because surprises usually have bad outcomes.
The more you know, like that cartoon commercial back in the day. Right? No, okay.
I thought it was G.I. Joe, knowing is half the battle.
Oh, maybe that's what it is. All right. What to expect on the loan side? You want to take this one, dude?
Yeah, well, let's run with this. We're being respectful of your time. So what to expect on the loan side? Well, we got all your fees. We disclosed to you. Your loan's next sent to processing. That means your documents are reviewed. All the work is double checked. It's organized so it's precise and easy to read to be sent to the judge, the underwriter, where your loan will be looked at to make sure it fits all the guidelines for your particular loan and your situation. While this is also going on, the appraisal is being done. Everything will come wrapped back together to have your loan underwritten with the appraisal to get your ultimate loan approval. Now, when you get the email and the congratulations from the loan officer and they call and say, hey, your loan's approved, sometimes there's nothing needed if your loan was perfect. But there's not very many perfect people out there. I don't actually know any. Well, you're pretty close, Vinnie, but still you're not perfect. Sorry, player. And otherwise, we're going to have a couple conditions we'll need from you. You issue those back to us. Then we sign off on them. We issue you what's called a closing disclosure. This is one of the most important documents because it's your final document. It even has a 3-day waiting period, you know, with it that says once we give it to you, you review it. You have 3 days to go forward with the loan or for us to change things with the loan before we can actually close. On the 3rd day, you sign your loan documents, and that's it. We prepare to fund. And Vinnie, I know me and you mentioned this before on our 10-minute updates is loan signings are going to digital. They're not going to be like the days of old where you sign 50 pages of paper. They're all going digital. More advanced lenders are going digital, which means you will sign a majority of your loan documents in the privacy of your own home and then meet a notary and sign 5 pieces of paper and go home. Then the loan funds, and I mean, the process is becoming smoother and more efficient now. It's really good because signing 50 pages of paper, it actually cramps your hand sometimes, and it's very boring.
Now, is any of the process different in challenger market? Okay, things are changing. If you're watching our market updates, you'll see that the market is changing. We're slowly getting more inventory coming to the market, yet as a whole, we still have a shortage of inventory, so be aware of that. Better pricing, and really based off the property. We still have people buying out there. We still have properties going to market. Being that in our hyper-focused community in San Diego, now if you're watching in a different area, talk to a trusted resource there or reach out to us, or we could probably set you up with someone. But here in San Diego, again, we're sitting, about, I think it was like 4,700 or around there of inventory with single-family homes, detached condos as of yesterday. That gives us a little bit under 2 months of inventory. To give you an idea, we were at 7,800 last June. So we've had a drop in inventory out there. So being that the demand is still there, pricing has been kind of sitting steady. Some properties we're slowly starting to see values come down a tad bit, but nothing drastic. Also terms, maybe people need to move out of the property a little bit quicker, or they need a little more of a rent back. So understand how the market's changing on a weekly, daily basis. With some properties, instead of getting the 5 offers you're getting 5 months ago, maybe you're only getting 1 to 2 offers now. So just understanding each property, each offer as it goes forward.
And there's also the emotional side on this. You have to look at it. Certain people are buying for certain reasons. People are selling for certain reasons. There's a lot of emotion going on right now because of job loss, because of hours cut, because of uncertainty. So there is emotional decisions right now in the market where people may be selling because of an emotion, and maybe you as a buyer can end up getting a better deal because of that. So you have to keep in effect that this is a human process, and there's human emotions and decisions coming into play. So, take that as a grain of salt with the whole market and things changing right now, because if you look at like what Vinnie was mentioning, if there's less properties coming on the market in a certain neighborhood, and all of a sudden one comes on you really like, Vinnie, correct me here, I don't think it's right to come in and think you're going to make a super low offer and get that property in a highly desirable neighborhood that barely has any property sell.
Well, again, I mean, the price it's offered at is not necessarily the price it's going to sell at. Some people price it lower with the idea they're going to get a bidding war. Other people price it higher because they're overestimating the market. So understand what price they're asking for and then assess it. I mean, I have a lot of realtor friends out there, and you'll see, there's a Zestimate on their property, right, that they have no control over, yet they have their property listed for $100,000 more, and they get it sold at $100,000 more. Or, they have the Zestimate, which is, $100,000 more, and they're able to sell it for, they sell it for $100,000 more because based off of the age of the home, based off the upgrades, that pricing that they have it at is what the property is actually worth. So understanding the market, being aware of what's going on is going to give you a better reference point than just saying, hey, they're asking this price. But just remember, what they're asking for is not necessarily what they're getting. It's just the advertising tool. And there is.
Man, I got to say, that's some good looking guys right there, huh?
A lot of Photoshop right there. A lot of Photoshop.
A lot of airbrush on that, my friend. At least on my part, I worked on that hard. That was very expensive to get that airbrush.
So if you guys have any questions about what you watched here, if you have any questions about the market, feel free to reach out to myself or David. Follow whatever platform you're watching this on. We do this Monday and Friday for a market update, and then next week we're going to actually have an investor seminar. So if you already own a property and you're looking to buy that next property, we're going to focus on an investment seminar. If there's other seminars that you're really curious about, reach out to us. We'd love to hear your feedback. We'd love to hear how we can venture out to you. And don't worry, we're not going to be one of those people that are going to constantly call you or reach out to you. We'll respect your privacy if that's what you're looking to be had.
Thank you all. Y'all enjoy your Saturday, and corners turn.